Bank right across the street over there. And today it's super exciting because this is actually a brand new workshop. Basically, the feedback we kept getting from organizations like yourselves and from people walking into the bank was that, oh my gosh, I want to know how to buy a car, but it's not like one of those things that anybody really teaches you how to do. You just kind of like figure it out, right? So that's what we're going to talk about today, is how to do that. So let's just be clear. So who in here, has anybody purchased a car before? Like you've been part of that? Okay, a couple of you. Has anybody been part of it? Like maybe your parents bought it for you, you were with them, or anything like that? Okay. And the rest of us were just like, oh my gosh, I don't even know what we're doing. That's totally fine. So let me just first tell you why we need a workshop like this. Okay, I just want you to imagine. Let's pretend you were going on a road trip to New York City. You want to go across the country road trip to New York City. What's probably like the first thing you would look at? A map, right? You wouldn't just like get in your car and be like, I'm pretty sure New York's that way, so let's just go, right? Like, I don't think we would do that. You might get to New York doing that, but you will waste a lot of time and waste a lot of money, right? Well, same thing as buying a car. Like, you can just go to the car dealer, like you can do that. There's nothing to stop you from doing that. Walk into the car dealer and being like, I need one of these, so let's get to it, right? And you're gonna be fine. You're gonna get a car, but you might waste time, and you might spend more money than you need to, and you might feel very out of control of the process. And so I don't want that to happen. So we're going to walk you through some of the steps that you're going to need to know to make it happen. So the very, very first thing, before you even start like getting on the Google with like what car do I want and everything like that, you got to know how much money you have to put towards a car. That is step one, all right? Next step is you got to think, okay, how can I afford this car? So financing. Then once you figure that out, that's when you can start researching your car options. Okay, so do I get a big car or a little car? What kind of car, fuel economy, blah, blah, blah. And then finally, once you've done that, that's when you can start shopping for the car. Now, unfortunately, a lot of people start here and like just, I don't know, figure this part out later. And that's just not necessarily the best. Now, I know why that happens though, right? Because which one's the most fun step? Four, right? I mean, are you kidding me? I mean, if you think budgeting is the fun step, there is something wrong with you. I'm just gonna tell you right now. All right, so that's why that happens, but that's the smart place to start. First step with budgeting. So you have to look at two things. You have to look at what money do you have coming in versus what money do you have coming out. All right? So you've got to look, all right, what am I getting every month after taxes? So if you have a job, that's looking, how much do I make at my job? If that's, student loans or grants or something like that, then it's looking at all of those different types of things. Then, versus expenses, what am I spending on food? What am I spending on housing? What am I spending on debt? Saving? All of those things. And that's when you can start seeing, okay, do I even have the money for a car? Because maybe you don't. Maybe this is where the conversation stops, right? Now, I will tell you, it can be sort of dangerous sometimes for full-time students to be looking at car loans. Because if you're on loans and you're already going into debt, sometimes it can just feel like, well, I'm already making negative money right now, so why not just like make more negative money and just like get a car that I can't afford, right? And now, luckily, it's going to be hard for you to get a loan if you don't have a job. So there's systems in place to make that not happen. But making sure that you have this money set aside is super crucial. Now, I'm not even just talking about the car payment. Remember, there's a lot of stuff that goes into owning a car besides just the car payment, right? What other kinds of things do we have? Gas, insurance, oh my gosh, maintenance, right? Like, okay, anybody paying their own car insurance right now? Oh my gosh, wasn't that like the worst part of becoming an adult? You're like, really? This is lame. I was excited about being an adult. Why now? Yeah, insurance, maintenance, gas, all these things. Now, I will tell you, people always underestimate how much they will drive their cars. All the time. They're like, oh no, I live super close to work, like I'm never gonna drive my car. You'll drive it all the time. So just know that, and remember, gas costs money. And it's unfortunate because when gas was like super cheap a couple months ago, like I mean cheap, people were like, oh great, gas is cheap, it will be forever. You've got to know these kind of things. things, right? Maintenance, here's the thing. I'm talking about not just maintenance that happens, preventatively, like, oil changes. You have to save for when you run over that nail and you need a flat tire, you need to fix your tire. You need to save up for that, because if you don't include that in your budget, it's not a matter of if your car is going to break. It's when, right? It's when is that going to happen. So you've got to have in your budget $20 a month I put into a maintenance fund. So when one of those fantastic little belts in the thing breaks, I'm going to have the $300 to fix it. Okay. So once you've figured out, okay, I can find $300 in my monthly budget to put towards a car every month, and that includes gas, that includes the payment, that includes everything. Okay, so once you've figured that out, then you got to think, how am I going to buy this car? And you got a couple options. Some people just save up their cash and they buy a car in cash, which is probably the easiest thing to do in terms of just keeping it clean. You just, hey, here's $1,000, let me take that thing. Great, and it's done. Now, there's some downsides to this stuff. It does take a while, right? It takes a while to build up all that cash. It's good because you don't have to pay any interest, right? Loans aren't free, okay? But sometimes I see people have a misunderstanding about what this means, okay? So like, let's say they're really good savers. They're a good saver. They have $5,000 saved up in their savings account, okay? And they think, oh, I've got $5,000. This is great. I can pay cash for a car. Well, yeah, you could for a used car, but then you have zero in savings. And so if paying cash for a car is going to completely wipe out your emergency savings, you've got to think, is that still the smartest option for me? I would hate to see you spend your very last saving dollar on a car and then have zero in savings, but have a car. But then what if you break your leg the next day? You know what I mean? Like, it's really important not to completely wipe out your savings. Now, you can also go to the dealer. So let's say you say, okay, you know what, I'm not going to pay cash, I need a loan for this car. Okay, you could go to the dealer and say, I want that car, can you give me financing? The dealer can do that for you. Now, a problem with that is it's very on the spot, right? Because these people want to sell you a car, that's their job, right? So of course they want you to get approved for financing, but you might not be getting the best deal. So you might have an interest rate, they might be offering you an interest rate that's really high, and you might not know that because you just went to the dealer that first time. Another option is you could go get pre-approved. So what that means is you go to your bank, you say, hey, you know what, I'm looking through my budget, I think I can afford a car, I would like to get pre-approved for a loan. So basically what that would mean is they take a look at all your stuff and they say, okay, I can pre-approve you for $10,000 or whatever that is at X interest rate, at 1.9% interest or 2% interest or whatever. So then that's like you have a $10,000 check that you can then go to the dealer and say, well, I'd like that car because I have this money, it's already lined up from the bank. So now the benefit of that is it's easy, it helps you budget, right? You know exactly what that interest rate is. If you want to get pre-approved, I would actually recommend going to the place you bank, maybe one other bank, and maybe a credit union. I would find 3 different things and compare those rates. Because if somebody can give you even a tiny bit lower of an interest rate, well, wouldn't you want to do that? The downside is, of course, it's not fun, and it's not immediate, right? You have to be thinking in advance. You have to be planning in advance. But these are the 3 different options that people use to buy a car. Now, when I say buy a car, I don't just mean new. Sometimes people, you can finance a used car off of Craigslist, right? Same thing. Instead of taking that $10,000 check to a dealer, you're taking that $10,000 check from the bank to a private seller on Craigslist or wherever it is. There are differences in how much a bank will lend depending on if you're getting a new car or a used car, and we'll go through that. But just so you understand, I'm not just talking about a dealer. You can get a used bank. Any questions about this? So, you gotta go get pre-approved for a loan. Okay? Has anybody in this room ever applied for a loan, like a mortgage loan or a home loan or like a Okay, so here's how that's going to go down. You go to the bank. You're gonna sit with the teller. Like let's say you're at the bank and you're doing a transaction at the teller, and you say, hey, you know what? Is there somebody who could look at a car loan for me today? And they'll say, yeah, absolutely. Why don't you take a seat? They're gonna sit you down with a banker. The banker's gonna say, okay, let's look at how much you make. That's probably the number one thing they're gonna say. Now, if you say, oh, well, I actually don't have a job right now, that's gonna be tricky to get a loan. And I get where the confusion comes, because students, we get loans to go to school, and we don't have a job, but someone's still going to give us a loan. Car loans don't work like that. For a car loan, a bank is going to want to see that you have income coming in every month. So if you don't have a job, that's something you're going to want to get before you go try to get a loan. They're going to say, well, where do you work? And how long have you worked there? Because not only do they want to see that you have income coming in, but they want to see that it's stable. Remember, the whole point of the banker in this situation is to see how likely you are to pay that loan back. Right? So if I give you $10,000, I got to be sure you're going to give it back to me. And the way I'm going to find that out, do you make money? Is it stable? If you've only worked somewhere for a month, I might be thinking, you know what? I don't know, how stable is that job? You haven't had it very long. Versus, oh yeah, I've worked here 3 years, I got stable income, totally fine. That's going to look different for a bank. Other debts. So a very common situation, right, is people graduate from college and they have their job and they want to go get their car loan. But then they uncover that the bank sees, oh, but okay, this is great. You're making $3,000 a month or whatever it is. But I see that you're spending $1,000 a month paying back your student loans, other debts. So they have to subtract that out of what your monthly income is. They might pull your credit. Anybody in here have a credit card already? A couple of us, okay. So basically, if they pull your credit, what they are looking for is how long has this person had a credit card, and do they make their payments on time? These are all different things they're going to sit. It's an easy application. It takes only like half an hour. You sit there. Some people even do it online. You just go online and fill out this stuff. Some things that you're going to hear, all right, when you're talking about credit. Credit is your ability to borrow money. So that's what they're going to ask you. When you're sitting down with a banker to get a car loan, they're going to say, well, how's your credit? That's what they mean. Your credit report is where they keep track of all that stuff. So like, let's say you've had a credit card for 3 years. Your credit report will show that. Credit report, like my credit report would say, I'm only sure it's had this credit card for 3 years, and she's made one late payment, and the rest of them have been on time. The stuff that's in my credit report is given a score. It's like a grade, right? So it's a 3-digit number based on what's in your credit report. And the credit bureaus are the companies responsible for collecting this data. So here's what a bank's going to look for. In terms of credit, credit is a 3-digit number that ranges from 300 to 850, right? That's based on, like I said, payment history. Have you paid your credit cards back on time? Amounts owed that you owe on your things. Length of credit history. Oh my gosh, totally common problem. People will graduate from high school or from college, and the bank will say, oh, let's pull up your credit. Oh, I see that you've never had a loan before. That means that whole 15% is like zero because you don't have any credit history. New credit, types of credit, all of these things contribute to what that score is. 720 is considered a good score. So if you've got a 720 or above, a bank's going to say, oh yeah, you've got great credit. Okay, I can take this into consideration with your loan. Mid-600s is where a lot of banks will have their minimum to lend to people. So like if you come in and you've got a great job and they pull up your credit report and they see, ooh, you've got like a 500 credit score. A lot of banks will be like, I can't lend you money until we boost up that score a little bit. Another thing you're going to hear, and this is all kinds of loans. This is like, you're going to hear this when you get a mortgage too. banks are going to consider what's called a debt-to-income ratio. Have you guys heard this concept before? Okay, so here's basically what they're doing. Remember, they want to know if you are going to pay this loan back, right? And they've got to make sure that they're lending responsibly. So they're going to look at how much you make versus how much you owe to other people. That's called a debt-to-income ratio. So a lot of banks need you to be at a 36% or below debt-to-income ratio. So that means that all of your debt, including the new car payment, any student loan payments you might have, any credit card payments you might have, any loan payment cannot exceed 36% of your income. Because they figure, well, you've got to live, right? So if you're spending 100% of your income on this, car, well, how are you going to eat, right? So that's where you're going to hear. Some banks are higher. I've seen some people say, oh, we'll lend at a 42% debt-to-income ratio. Some are lower. Oh, we'll lend at a 30%. But basically what that means is the percent of your money that can go towards this debt. You see why people with a really high student loan payment often get turned down? Because they're already at 36%. Because they make, $1,000 a month and their student loan is $300 a month. Like, well, you're already maxed out. We can't give you another loan. Here's some things that you're going to need to ask. When you are talking with a bank, when you're talking with a credit union, when you're talking about anybody that's going to lend you money, what is my interest rate? That's the number one thing you've got to be asking. What is my interest rate? Because remember, guys, interest is that little fee that you pay to have the loan to begin with, right? So like your car loan might have a 3% interest rate, or a 2% interest rate, or a 1% interest rate. What is my loan term? So am I getting this car loan for 3 years? Will it be paid off in 6 years? Most places will not write a car loan for more than 6 years. Maybe it's 1 year, maybe it's 3 years, maybe it's 4 years. And finally, what is my down payment? So what is my down payment? That means, let's say you want to buy a car that's $15,000. And a bank might say, well, I don't want to lend you $15,000. I'll lend you $14,000. But you've got to put $1,000 down. Does that kind of make sense? Mm-hmm. Yeah. Now, why do you think people like to, or why do you think banks often require a down payment? Here's why. So, let's say that you bought a car, all right, and there was no down payment at all. You just financed the whole thing. Someone lent you money for the whole thing. And then a couple months in, you're like, it's been nice, but I can't afford these payments anymore. So you stop paying. So you stop paying on the car. And after a while, the bank is going to repossess that car. So that means, hey, you know what? You stop making payments, that means we have to take the car back, right? That person has no car anymore, but they haven't really lost a lot of money, okay? Whereas, let's say that the person put $5,000 down on that car of their money. Well, now they have a pretty big incentive to keep making those payments, right? Because if they were to stop and the bank were to have to take back the car, well, that person not only doesn't have a car anymore, but they also don't have the $5,000 that they gave towards that car. So it's like kind of having skin in the game. You guys know that phrase? Yeah. So that's why a lot of people, especially if you've got bad credit, will want a high down payment. Now, here's what I want to draw your attention to, though. You don't want to just get obsessed with the monthly payment when you're deciding if you can afford a car or not. Because, look at these two scenarios, all right? Here's a $15,000 car and a $20,000 car. Now, obviously, if you just look at the cars, don't pay attention to this one down here. You just look at the cars, which car is cheaper? The red one, right? The 15. Okay. 3% interest on both loans. If you get this car for over 3 years, your monthly payment would be $436. If you get the more expensive car and you pay it off over 5 years, your payment will be $359. Now just look at those two numbers. Look at it, 436, 359. If you just look at those numbers, which one looks cheaper, the red or the yellow? The yellow, right? But is it really? No, because look at the total cost. When you finish paying off this loan in 3 years, you will have spent $15,700, right? That's what you will pay total. This car, you'll have spent more in your financing. You'll have spent $21,500. You will have spent way more on this car. But some people just go, I don't care. I just want to have a low monthly payment. That's all I care about. Do you see why that's not the best way to go? Right. And guys, I'm telling you, I don't want to make car dealers sound like evil people because they really aren't. They're nice people. But it is their incentive to make it look like you could afford a car, right? So like they'll be, oh yeah, like you can afford this car, $200 for the next 10 years of your life, right? Like, so just don't worry about monthly payment. You've got to look at the whole picture, right? That's what you got to think about. All right, so now you figured out your financing. Okay, you figured out your financing options and you've got this all figured out. Now you can start researching cars because now you have figured out how much you qualify for. So the bank might say, gosh, you know what, I know you kind of wanted a $20,000 car. I can only qualify you for 10. Or maybe you realize, oh man, I really wanted this car, but I looked at my budget, I can only afford to put $300 towards a car every month. So that's going to limit you. Now you can take that information and do some research. Now I'll admit, back in the day, this used to be harder, right? You had to go to the library and get the big consumer report books out and look at average cost. I mean, oh my gosh, guys, now you can do it right now as I'm talking to you, okay? It's incredible. So you're going to be wanting to look, what features are important to you, okay? Seating, cargo, average maintenance cost. You can look at all of this. You can Google, what is the average maintenance cost for a Mazda 3? Or what is the average yearly maintenance cost for a Honda Civic? Guys, they vary widely, but all of this information is out there. Mileage, how many miles to the gallon are you going to get? If you're driving a ton, yeah. If you get a big gas guzzler, you're going to pay a ton in gas. And I mean a ton, guys, a lot. Insurance. If you've got kind of a hypothetical car in mind, I would 100% call up your insurance and say, hey, hypothetically, let's say I got this car, what would the quote be? Different cars are insured for, if you want to pay through the nose with insurance, get a brand new red sports car. Just do it. If you really have your heart set on paying a ton for car insurance, that's the way to do it. Because remember, they look at data, right? Car insurance is all about how likely you are to get in an accident. And so they look at all the statistics. Hey, people speeding down the road in brand new red sports cars are going to be more likely to get in an accident. Whereas, when I had my 13-year-old Toyota Corolla, we paid nothing for car insurance because they're like, yeah, she's not doing anything. She's not going to get in an accident. All of these things are super, super important. Something that's not up here. Safety. Safety is a huge thing, that we don't think about, right? Because we're best case scenario people, oh, we're never going to get in an accident. Yeah, you won't find that stuff out. Now, when you're doing your research, and anybody that watches TV with commercials is going to hear people talk about leasing. So we should address that, okay? What is leasing? Well, leasing is kind of like the equivalent of renting an apartment. It's like buying a house versus renting an apartment. When you lease a car, you don't own it. I guess when you finance a car, you don't really own it, but you are paying it off and then you own it at the end of the lease or the loan term, right? With a lease car, you have to give the car back. It's like you're renting a car for a little bit. Oftentimes, if you lease it instead of buy it, the monthly payment is going to be lower. All right, so that's what attracts a lot of people. You've probably seen it. If you've ever seen a car commercial for a luxury, fancy car, you'll notice at the end, they usually say, and it could be yours, for a monthly lease of like $199, and it's something absurdly low, and you're just like, what? Really? I could drive that car for like $100? Wow, that's amazing. But remember, they're gonna let you borrow it. They're not letting you buy it. And there's limited miles, so that's the whole thing with a lease. You'll have it, they'll say like, okay, you can borrow this car for $300 a month, but you have to keep it under 10,000 miles for the year, or like whatever it is. Sometimes they're really low. Sometimes it's like 5,000 miles. Really, really low. And if you go over it, if you drive more than that, they charge you per mile that you go over, all right? A lot of them are lease charges. So you have to pay the monthly fee, but then it's also, all right, to start off your lease, you owe us $1,000, and then it's going to be like $200 a month after that, and everything like that. Also, vehicle wear and tear. So again, it's just like renting an apartment. Have you guys ever rented an apartment and the landlord did the inspection afterwards to like see if you destroyed the place, right? Same thing with a lease. If you own a car and you ding it, that's your own problem. If you have a leased vehicle and you got some tears in the upholstery or like whatever, that's on you. That you usually have to fix it or pay to fix it if there's a penalty and everything like that. So I'm not telling you that leasing a car is always a bad choice. Because you know what, I'm a firm believer in there's no absolutes for everybody. Sometimes things are good ideas and sometimes they're not. All I'm begging you to do is please do the math before you do a lease. The whole math. Meaning, I drive this much. If I go over, this is what I'm going to owe. This is the lease fee. This is what I'm going to charge at the very end of it. And you might find that even though it looks like it's cheaper to lease, it's actually cheaper to buy. Don't let someone else do that math for you. You're a smart, college-educated person, right? Don't take someone else's word for it. You do your own math and make sure it works for you. Okay, so then we get to the fun part, right? We get to the shopping part. So exciting. One of the biggest questions you're going to have to ask yourself is, do I want a new car or do I want a used car? Now again, I'm not going to stand up here and say, never buy a new car or never buy a used car, because there's no absolutes. But there are some pluses and minuses. A new car is probably more reliable, right? I mean, you can get a lemon and buy an awful car, that's totally true. But it's on the whole more reliable because someone else hasn't driven it before you. It's also more expensive, okay? You pay a premium to have a car that no one's driven before. Warranty is also an option. Right? Sometimes cars come with a warranty, sometimes you have to purchase an extended warranty, but it's an option. The dealer will give you a warranty, or that's at least something you can do. Now, a used car, less expensive, and it loses less value. So here's what that means, right? Let's say you bought a $20,000 new car. Even if you were to drive it for a week and then try to sell it the next week, are you going to sell it for $20,000? No. As soon as you drive that new car off the lot, it is no longer new. It is now used. Even if it's used for 3 days, it's now a used car, and you're never going to get that premium, right? Now, a used car, though, someone else has already taken that loss, right? So it's going to lose value less quickly, but, it might be less reliable. Now, anybody in here like super good at cars? Like you're one of those people, you can just look at it and be like, I'm not going to pay someone to change my oil, I'm going to do this, blah, blah, blah. Anybody good at cars like that? Oh, thank goodness. Okay, so if you are not like that and you want to buy a used car, always have it inspected by a reliable mechanic that you know. Now, some dealers have what's called like certified pre-owned, meaning they have done that for you already, which is cool, right? But if you just go on to Craigslist and type in, car, they're not necessarily going to have done that for you. Should you ever just believe what a third-party person says? No. Say, hey, that's great. Let's bring a mechanic over and have them check it out. New versus used. Also, some banks, well, all banks are going to have different terms for new versus used cars. So they might say, well, I can give you this interest rate if you're buying a new car, but I'll give you this interest rate if you're buying a used. Or I'll buy, you can buy a used car with this loan, but it has to be newer than 10 years old, or something like that. Okay. So that's why you want to also be talking, to the bank about which one of these options there are. When shopping, always, always, always take it for a test drive. Don't fall in love with the car before you get behind the wheel. Because we all know what that's like, right? When we like know it's a bad decision, but we are so in love with the idea of having this thing that we just kind of tell that little voice to shut up in the back of our heads, right? Always, always, always test drive with an open mind. If it feels cramped, like I'm tall, there are certain cars I just cannot buy. You know, I just can't do it. So like all my friends in high school had a Honda Civic and it was like the thing to have, like all these different little colors of the rainbow. I cannot drive a Honda Civic. I do not fit physically in a Honda Civic. So know that, right? If it feels weird braking for you, if the acceleration feels off for you, or maybe it's just, you know, some people like the steering wheel close or whatever, always take it for a test drive. And finally, turn down the pressure, okay? Anybody ever felt pressured to buy something by an employee at a store? You know what I mean? Oh gosh, the worst, man, like around Christmas time and they follow you around and they're like, come on, like how about that one right there? Like you like it though, right? You know? It's the same with cars, you know? Just remember, it's your money and no one needs to pressure you. No one needs to pressure you into buying something you're not ready for. Doing the research beforehand helps turn down that pressure, right? One of the worst things you can do is go into a, you know, dealer and just say, hi, I don't know anything about buying a car. I have $20,000 to spend though, so can you like help me? Like this is the worst thing you could do, right? You've done your research. You know what you're looking for. And, oh, can I help you? Oh, this is a great one. I'm good. You know what? Here, I do have a few questions based on that, blah, 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 right? Turn down the pressure. The car will be there the next day. Don't feel pressured by someone to say, oh, well, you know what? You have to do it right now though, you know, just for you before 5 o'clock, before I leave today. If you need to make an on-the-spot decision that you're not comfortable with, it's probably the wrong decision. The car's still going to be there. I promise you they'll still sell it to you tomorrow if you come back. Promise. Wait for all parties to sign off on the financing before you drive the car away. That's a big one, right? So make sure that all of the financing has gone through, everybody has signed off, everything is good. This is another reason why pre-approval can be a good thing. This isn't super common, but it does happen. People will get dealer financing, and they'll say, oh, well, you know, it'll go through, it's gonna be fine. Like, why don't you just take the car home? And then for whatever reason, the terms change. They say, oh, well, you know, it was gonna be a 2% interest rate, but now it's 5%. And then what are you gonna do? You already have the car, right? Like, you can take it back, they have to let you do that, but a lot of people will just be like, oh, well, I'm already driving it, so okay, whatever. Always make sure that what they're offering you is final, everybody has signed off on it before you take that car home. Know what your trade is worth. Okay, so this might not be your first car buying experience, but on your second one, common situation, right? So you drive your old car to the dealer, you're shopping for a new one, and they say, you know, okay, well, would you like to trade in your old car? Because you can trade in your old car and it can go towards the purchase of a new one. Well, if you don't know what your car is worth, you could get taken advantage of, right? So always know, and guys, again, this is easy. Oh my gosh, the age of Google is incredible, right? You can totally find out. I have a 2008 Mazda whatever, it's got this many miles, how much is that worth? So you know what your car is worth. Don't get taken advantage of there. Or you can go on any number of those. CarMax will just like, they don't even buy a car from you, they'll just tell you. Yeah.
What I learned when I was going for cars, and what I bought from them, I learned a lot from them, was by going to CarMax. I went out there, no one really bothers you until you go get an agent. I went to all the cars with similar models next to each other, compare them, try everything out, and then go on to watch them ask for a test drive.
Right.
But they would price my car while I was there, and then I would compare the things there. And they offered me a little bit less than I could get other places, but I got some baselines.
Right.
And then if you do purchase, you have 5 days that you can bring it back, no questions asked, unless you're going to pay total of the car.
Right.
So it's hopeful. It doesn't mean you have to ever buy there, but there's a lot of things you can test out there, like a library, you can research, try to look out.
Yeah, and isn't it incredible? I mean, and I've used them too. I mean, their online is great because you can see, oh man, I've got this used car, this many miles, whatever. Now, once you do get that car, don't make some of the common mistakes that we see. If you have financing, you've got to make all those payments on time. You have to. It's so frustrating. If you stop making those payments, guys, your credit score is going to plummet and you risk giving up the car, right? I hate it when banks are painted as these evil people, like, oh, you took her car away. Like, well, no, we took our car back because she wasn't paying it. It wasn't her car, right? It was our car, and she wasn't paying it. Have insurance. It is the law. You have to have car insurance. And I know it's super common. Oh, but like other people get in accidents. Like that's not something I do. Guys, I tell this story to everybody. I was stopped. I had just gotten through a red light, and I was stopped, and a guy behind me ran the red light, plowed into the back of my car. I was doing nothing. I was like not even moving, right? Like how could you be less at fault in an accident? You know, like stop. And he didn't have car insurance, so I'm glad I did because I had uninsured motorist coverage, and they were taking the guy to court and everything. But like, I didn't. That was not on my agenda that day. Like, get rear-ended, right? So you gotta have car insurance and drive safely. You know, don't be that person that's like, oh, but I'll just look at this one text. Oh, but just like, but I'm really late to work. Yeah, you know what makes you really late to work? An accident. Super late to work, right? So just keep all that stuff in mind. There are also a ton of resources. So Midfirst.com, if you bank with us, if you don't bank with us, we have a lot of calculators to help determine that monthly payment, determine your total cost. So you literally just go on there, you know, go to calculators and it says, oh, what kind of car do you want to buy? You know, what if it was this term? What if it was this term? There's a lot of things you can play around with to see exactly what your terms would be. Kelley Blue Book? Anybody ever been on KelleyBlueBook.com? Oh, it's the best. I mean, it says anything, every car values, you know, what's my trade-in worth? What should this car, what's the average price that someone pays for this car? That's really, really critical. Edmunds.com has a, similar to Kelley Blue Book, has a lot of research like that, okay? Please don't go into a situation before you check this stuff out, guys, because knowledge is power. If you go on KelleyBlueBook.com and notice that, oh, the average price someone pays for this car that I'm looking at is $16,000, and the dealer is trying to tell you, oh, I'll give it to you for $19,000, oh, it's a screaming deal. Well, you know that it's not, because you have done your research. So you gotta make sure you're empowered like that. And of course, we're right across the street at Midfirst if you have any questions about any of this, or if you're just like, man, something didn't really make sense, or I want to find out more, or anything like that. But before we go, we do have a few minutes. So what did I miss? Are there any questions that I can help you with now, or problems you've run into, or concerns that you have about this process that I can help you with?